Hi. So welcome to the new topic. The topic is of registration under GST. So far we have discussed a lot on what is supply, what is interstate supply, intrastate supply, how the supply is determined, what is the place of supply, time of supply, and again things like input tax credit. So many things we have discussed. But practically now we are entering a practical area, that is procedural area. The procedural area is equally important, but a special feature of GST is laws enacted by the government, by the legislatures, is many of the procedural areas have been covered under the substantive law. Say for example registration. About registration, number of sections have been used here, right from section 22. Talking about registration. Though this is the procedural aspect, this has been crystallized under a law, not left to the government for making rules. Rules are also there, but most of the main area has been under the control of the legislature. So CGST Act is providing for the provisions relating to registration. So this registration, we can divide who requires a registration. This is under sections 22, 23 and 24. Who requires registration, who does not require registration, who is required to have registration on happening of a particular event. See here, if you divide this way, look at section 74. Section 74 talks about registration which is compulsory. So no relaxation, nothing. Automatically you have to get yourself registered if you fall under this category. And section 23 talks about those people who do not require any registration at all. No registration is necessary. They are left free. Under any circumstances, they don't require registration. And the third category is these people under section 22 require registration only when they cross the limit, threshold limit, that is called threshold limit, which is 20 lakhs or 10 lakhs as the case may be. See, have an overview of section 24, 22 and 23. Even though the order given by the lawmakers was different, so I start with 24 because 24 category people require registration irrespective of their turnover limits. Nothing, no relaxation. Automatically they have to get themselves registered. These suppliers may be supplying goods, may be supplying services, or both. Look at the category. Look at compulsory registration under section 24. Category number 1, there are the law, section 24 gives the list of 12 categories, 1 to 12 categories of people who require registration. The last one is one which the government may notify. If the government notifies this type of suppliers require registration, then they get registered. Otherwise, the remaining 11 confirm. What are they? Who are they? Number 1 is those who are making taxable supplies interstate. So look at making taxable supplies interstate. So your activity is interstate, your supply is interstate, and your supply is a taxable supply. If both the conditions are satisfied, automatically you have to get yourself registered no matter what. What is the turnover? Nothing to worry. So this is a very, 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 very harsh provision. It has sweeping, far-reaching consequences in the time to come. And obviously, certainly, the lawmakers were very rigid and they made such provisions, and gradually they have to ease out because we are in a democracy. See what it means, interstate supply, anybody who is making, see when the law says interstate supply, we have to supply something extra, that is supply of goods or services or both. See the language says persons making interstate taxable supply. Supply of what? You have to fill in the blanks. Supply of goods, supply of services or both, because they did not mention anything. So how this can have far-reaching consequences. See, border states. Suppose small person like an electrician, a plumber. I am talking about small professionals, artisans, professionals, or you can say independent. Small professionals, a cameraman, a photographer. Say he is in Delhi and Gurgaon is abutting Haryana, either Noida is abutting state. Just 5 kilometers this way or 10 kilometers that way. So he is located in Delhi and he has photography, videos. He will be going to Gurgaon, places like Gurgaon, Faridabad, Noida, etc. If he goes to Faridabad and does some photography there, he is providing service, so he has to get himself registered. And he does it occasionally. His income on this photography is very limited, something like a casual one. So when he goes to do photography or video in Noida from Delhi, it is just nearby and he is hooked here because it is interstate supply. When he goes to Gurgaon, it is an interstate supply. Just like take the case of a plumber, electrician, photographer, and like that so many things. Even a teacher, sometimes he goes to teach. He goes from one place to another place to teach, like something like home tuition. See, in places like Delhi, home tuition is very normal, very popular. So people travel from one place to another place, and if they just cover 5 kilometers, another state comes. This way Haryana, that way, particularly Haryana, Uttar Pradesh, and what you can say, Haryana, Uttar Pradesh, both are attached to abutting Delhi. And people from those states come to Delhi and people from Delhi go there and they provide some services. It maybe some sale also sometimes. So for interstate supply, simply because it is interstate, you get yourself registered. Once you get registered, all other things follow. That too, everything has been made online. So these people have to engage on many an occasion. These people have to engage somebody and they have to pay. Filing returns monthly returns. You see the fun. So what the government is expecting from the public, it is very difficult to gauge. So if you make any interstate supply, you have to get yourself registered. How serious and how harsh this provision is. Similarly, casual taxable persons. Second one is casual taxable persons. So casual taxable persons means these are actually not selling on a regular basis. Occasionally, sometimes they do. These are not regular traders. Say, for example, there are trade exhibitions. In Delhi, say Pragati Maidan, there are trade exhibitions, industrial exhibitions. Their main motto is to exhibit goods, and incidentally, if somebody comes for buying, they will sell also, so that the person will be using the product and testing the product, and he can refer to other people also. So I have got the product, so I have used it and this is very good. You also can use it. See, a satisfied customer refers. Referral business. So for referral business, maybe sometimes they do, but they also have to get themselves registered. Even if they do it once in their lifetime, only once in their lifetime, it so happens. Casual taxable persons means because they are taxable persons. Who is the taxable person? Who is dealing some goods or services, something like that. Taxable person has been defined. So if you are a taxable person, even if the activity is casual, you have to get yourself registered. See, the harshness here is not registration, but it has been specified that I think it is under section 25. The casual person has to get himself registered before 5 days of expected sale. Say before 5 days of expected sale, you can imagine. This is very harsh. He doesn't know whether he would be able to sell or not, and he has to pay tax in advance. Somebody is going to an exhibition, very small person, because not all big persons will go for exhibition. In trade exhibitions, if you go to places like Pragati Maidan, Delhi, you will find out small and marginal people. There are so many small and marginal people who carry their products for exhibition and sale. And sometimes some people do for the first time in their life. They try, innovative people. And so they have to get themselves registered and they have to pay tax in advance. Imagine, that too 5 days in advance. He doesn't know whether the product will be sold or not, whether his services are hired by anybody or not. Still they have to get themselves registered. This is very harsh. It will have telling effects ultimately. See, the lawmakers should have thought that there are so many small and marginal people who should not be put to trouble. But that is happening. And so the middlemen take advantage of it. And also the departmental staff, harassment, because plenty of opportunity for the taxmen to catch hold of such small people to collect gratifications, undue gratifications. That is possible. So you are giving a lot of scope to the taxman department to make money otherwise. So on one hand, government wants to see that there is no black money. So you are indirectly encouraging people to make black money. Black money. Who is making black money? So many people are doing, including employees of the government. So employees of the government are certainly involved in that, and particularly tax department. Certain departments are very much prone to all these things. Okay. So third one is people under reverse charge. See, under reverse charge, where you are liable to pay GST directly to the government, in fact you are recipient of supplies, still you are liable to pay tax, means you are a person under reverse charge mechanism. So obviously those who are paying GST under reverse charge are required to have registration. That is very reasonable, very much required. And the other one is e-commerce operator for services. So that is under section 9(5). E-commerce operators providing services on their site, just like aggregators, they are required to get themselves registered, because government cannot look to the other persons who are supplying. Non-resident taxable persons. Again, non-resident taxable persons, they are not here. Non-resident means not here. Non-resident taxable persons also has definition. Normally they don't live in India, they live elsewhere outside India, but still sometimes they would be making some activity. So section 277 talks about non-resident taxable person, NRTP, non-resident taxable persons. By definition, it means non-resident taxable person means any person who occasionally undertakes a transaction, occasionally, not regularly, involving supply of goods or services or both, whether as principal or agent. Maybe sometimes he acts as a principal, sometimes he acts as an agent, or in any other capacity, but who has no fixed place of business or residence in India. He has no fixed place of business here. Sometimes people come from Nepal and do some activity here and go. They have no establishment, no residence, no office. So, just like casual tax paying persons, these non-residents are also required to get registration. So, how do they get registration? Somehow they have to. And they have to put somebody here, or they have to put up some office. Somehow they have to get themselves registered. Government doesn't want to allow them do unnoticed. So, okay, this is okay. And tedious cases. So, those people, say government, local authorities, etc., when they pay any charges to the supplies received by them, they are required to deduct tax at source, TDS, that has been given under the law. So, TDS provisions have been introduced in GST law, just like income tax. So, tax deduction at source, those who are deducting taxes at source, they have to get themselves registered. And you are acting as an agent. The other one is you are acting as an agent or otherwise. You are dealing in the goods or services of others in the capacity of an agent or otherwise, whatever be the capacity, whether you are called an agent or not. You maybe you are as a friendly understanding you are doing, but still you are required to have registration because you are dealing in the transactions with others. You are dealing in the goods or services belonging to others. Next one is input service distributor. You know, input service distributor is one who pays for the services, for the inward services, but he doesn't have to use them, but their units, he has some units or branches under same permanent account number, PAN. So, he is authorized, he is entitled to distribute the input tax credit. So, that input tax credit he can get distributed. So, he requires a registration. Okay? And next one is a supplier other than the e-commerce operator, involving e-commerce operator under section 9.5. So, what is section 9.5 actually? Say for those e-commerce operators under section 9.5, they require registration under the same section. So, naturally they are for services. Let me throw light upon section 9.5 so that you will be able to understand. It is about services actually. Section 9.5 says, the government may, on the recommendations of the council by notification, specify categories of services, the tax on intra-state supplies of which shall be paid by the electronic commerce operator if such services, categories of services, if such services are supplied through it, and all the provisions of this act shall apply to e-commerce operators as if he is the supplier liable to pay tax in relation to supply of sub-services. So, here e-commerce operator is almost like an aggregator. So, through his site he is dealing, but it is about services. But what are the services which should be the government with the recommendations of the GST council will notify. So, for all the services, e-commerce operator is required to discharge the liability. So, e-commerce operator is liable to get the registration. So, that we know. Here we talked about it. But a supplier other than the situations under section 9.5. So, that is what section 24 talks about. See, section 24, look at the language of section 24. Section 9.5 are the cases where e-commerce operator requires registration because he is providing services through his site. So he is an aggregator. It is for services. Mr. X provides service, but he provides service through e-commerce operator. It is section 9.5, where e-commerce operator is required to have registration. But what about this category other than section 9.5? See, it says persons who supply goods or services are both. Persons who supply goods or services are both other than supplies specified under section 9.5. Other than means the rest. Section 9.5 is talking about services. Other than those, anything other than those, for the rest, through such electronic commerce operator who is required to collect tax at source under section 52. TCS. So TCS cases, where e-commerce operator is collecting tax at source, tax collection at source. Here, e-commerce operator, you see, e-commerce operator no doubt requires, and the person who is supplying also requires. If the service doesn't fall under section 9.5, that service will automatically fall under this, because tax is collected here. Tax is collected by this one. For example, CA Club India is there, and let us say that it is selling online classes. It is a service actually. Let us say that service is not covered under section 9.5. That service is not covered under section 9.5. So, CA Club India is collecting tax at source. It is selling, it is deducting the tax and retaining its percentage, and the balance it is giving to the actual service provider. So, in such a case, the service provider, the faculty or the professor who has provided the video lectures to be sold through CA Club is also required to get registered. No matter how much he is paying, even though he is not paying any tax, that they will. So why the lawmakers are so particular? Because what is it that he is giving? What is it that he is getting? So to ensure that there are no tax leakages, this has been provided. And all e-com operators, undoubtedly all e-com operators in India need to have registration. Next, last but not least, online data transfer. And see, every person supplying online information and database access or retrieval services from place outside India. This is very important to know. Nowadays, suppose some game is there. You download a game, but the provider of the games is located outside India, is not in India. You download a particular movie for value, not free. So, the company providing the supplying online information or database access or retrieval is outside India. Then he is sitting in California and you are downloading here. So that Californian man has to get himself registered here. If he doesn't have any establishment, he has to appoint somebody to do that. A responsible person should be placed here and he has to get himself registered. Otherwise, if he does it this way, Government of India has been losing a lot of money. Now it doesn't want to. Now it wants to look at, see, now onwards when the GST becomes operational from the appointed date onwards, the officers, revenue intelligence people and all, they have to sit with the computers internets and check up and search for e-commerce operators and operating in India, and also those supplying information database, those who are selling data from outside India, they have to check up and they have to catch hold of and collect the money. But here, if these are the data, every person supplying online information and database access or retrieval services, if these are provided to a non-taxable person like you and me, like a consumer, then only. Otherwise, if they happen to supply to a business entity, naturally it will be put under reverse charge. Other than a registered person outside India to a person in India, other than a registered person. If they are providing such services to a person other than a registered person, if they are supplying to a registered person, no issue. The registered person will be automatically liable under reverse charge. So, government is not leaving anybody, not sparing anybody. So, that's why you can say, under the existing indirect tax laws, there were so many loopholes. They were not able to cater to the e-commerce operators and services provided from abroad. Even though these services are consumed in India online, because everything through internet, it became difficult for the government of India to take care of those things and tax them. Now, the government of India has ample opportunity to catch hold of them and tax them. Thus, you can say that GST is a latest version, updated version of indirect taxes, latest updated version of value-added taxation system. So, a new generation thought, very much updated to suit the present day generation needs. It catered to the needs of the present generation requirements. Okay. Next, so last one is, the government may also notify, of course, on the recommendations of the GST Council, may also notify some persons and who require registration. And if it notifies that way, those notified persons will be required to have registration irrespective of their turnover. Okay. Such other person or class of persons as may be notified by the government on the recommendations of the council. Remember, under GST, without the recommendation of GST Council, nothing can be done. Nothing is in the hands of the parliament, nothing is in the hands of the state legislatures. Everything is in the hands of GST Council, and through the deliberations in the GST Council, they decide. So that is all section 24, where registration is compulsory. And the other case is when you cross the threshold limit of 20 lakhs. And before that, let me cover some of the explanations also. There are some explanations given here under section 22. Okay, first of all, I discuss section 22 and I then go for explanations. Okay. So, section 22 talks about registration of those persons who require registration if they cross the threshold limit. The threshold limit is 20 lakhs generally, and special category states given under Article 279. A. Article 279. Na? So, those special category where GST Council says 29, Article 279 is talking about GST Council. Na? Come on. Registration. What is the threshold limit here? The threshold limit here is 20 lakhs. If you cross the turnover of 20 lakhs, you have to get yourself registered. Till you cross the 20 lakhs limit, you don't need to get yourself registered. and 20 lakhs here, all India level, pan India, all over India, not confined to a particular state. Earlier the limit was for VAT dealers was 10 lakhs, and in a state like Delhi, in Delhi it was 20 lakhs only for Delhi. Suppose you have activities in 4 states, Delhi, Haryana, Punjab and UP. For each state the turnover limit is counted separately. But in today's situation, turnover of all states put together, entire country put together, of course including Jammu and Kashmir. Don't think that Jammu and Kashmir is out of GST. No doubt CGST Act is not applicable to the state of Jammu and Kashmir, but through their laws, because they have opted to make laws on their own, and they give a link, they allow these provisions to operate upon them. They cannot move in isolation. Now it is not possible. So including the turnover of Jammu and Kashmir, okay, including the turnover of Jammu and Kashmir, what happens is it should be 20 lakhs. And if you cross 20 lakhs, you are now, alarm bell rings, you have to get yourself registered. But certain states, some states have expressed their reservations that 20 lakhs is too much. Pahadi ilaka, hilly areas and backward areas. For example, northeast states like Assam, Meghalaya, Manipur, Tripura, Nagaland and Mizoram. And similarly this one, Jammu and Kashmir, Himachal Pradesh, Uttarakhand. So they say 20 lakhs is too much. So nobody will be under the tax net, everybody will enjoy exemption. So for them the threshold limit has been reduced to 10 lakhs, but in all other cases it is 20 lakhs. But the question is, how do you count the turnover? Interesting, very interesting. Turnover has been defined actually, aggregate turnover. This aggregate turnover unfortunately includes exempted supplies. Even though the supply is fully exempt, that is to be non-taxable supplies. See the danger. So when exempted supplies, non-taxable supplies and also export supplies, suppose export supplies are also included, then everybody, that to all India level, you have to count all India level and everything is included. Then what is remaining? Nothing is aggregate turnover. See section 2 clause 6, section 2 clause 6 defines aggregate turnover. This includes everything. So there is a scope that almost everybody will be covered under this, except a few small people, very small people. See, let me read out the definition of aggregate turnover. Aggregate turnover under section 2 clause 6 means the aggregate value of all taxable supplies, of course excluding the value of inward supplies on which tax is payable by a person on reverse charge basis. When you are paying tax on reverse charge pay basis, that cannot be included. It is only about outward supplies, exempt supplies, including exempt supplies, export of goods or services or both, and interstate supplies. Interstate supplies, because all India level, interstate supplies of persons having the same permanent account number to be computed on all India basis, but excludes central sales tax, central tax, state tax, union territory tax, integrated tax, excluding the GSTs. So now you can say everybody is covered here. Most of the people are covered here. See, majority are covered already under section 24. So many small people are already covered there under section 24, and rest you are covering under 20 lakhs limit, and the 20 lakhs limit includes everything: internal, external, export, import, all exempted supplies, everything. Okay? Exempt supplies, exports, and what remains? Nothing remains to be there. Everything is. Of course, non-taxable. They have not mentioned the word non-taxable. At least they have saved. Okay? So the risk is very high. So practically, when we move with the law, then we will come to know about this. Okay? So next thing is, what are the other provisions? Every person on the immediate day preceding the appointed day registered and holds a license shall be liable to be registered under the Act from the effect from appointed day. Suppose already existing registered persons are license holders. From the liable to be registered with effect from appointed day. Already you are a VAT dealer, you got the registration already. So you have to, that is transition, you have to switch to this registration, you have to get yourself registered here under this on the effective from appointed day. Appointed day means defined as the day from which, the date on which the act becomes effective. Right now they are talking about July 1st. So by July 1st, the existing license holders and registration holders also have to get themselves registered. And next one is transfer of business. Say, in case of transfer of business, the transferee has to get himself registered. Next, in the case of decision by a high court or tribunal, etc., which gives a decision, which gives an order that he has to be a registered person, the day on which the tribunal gave, see, with effect from the date on which the registrar of companies issues a certificate of incorporation, in the case of a limited company, joint stock company, giving effect to such order of the high court or tribunal. If a tribunal or high court happens to issue an order to that effect, suppose the registrar of companies issues a certificate of incorporation giving effect to such order, then by that time, on that day, you have to get yourself registered. Okay? And here, interestingly, there are certain explanations also. What are the explanations? The expression aggregate turnover shall include all supplies made by the taxable person, whether on his own account made or made on behalf of his principals. Means, let me put it this way. Aggregate turnover 20 lakhs and 10 lakhs is there, right? So aggregate turnover, they have added one more dimension. Aggregate turnover of self, but also of the principal. So you are acting as an agent of somebody else. Your own turnover and also the turnover of goods or services you dealt with for others as an agent. So Mr. X is an agent, his turnover and also his principal's turnover put together, it is counted. Second point is job work. Of course, there is a relief. The turnover of job work turnover not included in the turnover of job worker. So his own work is added when he is acting as a job worker for others. the turnover is not added. For example, there is a job worker. Self turnover, say for example 17 lakh. Turnover as job worker for others, because he will undertake others also, 8 lakhs. So, is he eligible to get the exemption? Can he avoid exemption? Yes. Why? Because his turnover is only 17 lakhs. When he is working for others as a job worker, that is not his turnover. It is not included in his turnover. So his turnover is only 17 lakhs. So he is eligible to get exemption. He need not have registration. He can escape. At least this relaxation has been given to job worker. Otherwise it would have become very complicated, very difficult for the job workers. Because on and often the job workers are very small people. They are doing independently. And if they are also booked means it will become very unhealthy. And the other one is special category states. Already I have told you, as specified under Article 279A. Article 279A is talking about recently inserted article about GST Council. So they have mentioned, I have already told you, northeastern states and this Jammu and Kashmir, Uttarakhand and Himachal Pradesh, hilly areas. Northeast states, Jammu and Kashmir and hilly areas, hilly states. And next, these are the explanations given for section 22, and come what may, that is section 23. This is about those who do not require any registration at all, irrespective of their turnover. Even if they have 1 crore turnover, they don't have to get the registration. But what are those great people to be garlanded as not requiring? So the law is sparing them. So very few, only two categories. One category is a person engaged exclusively in the business of supplying goods or services that are not liable to tax or wholly exempt from tax. So, supplies either non-taxable or fully exempt. Non-taxable or fully exempt. This is category number 1. Second one is agriculturist. See how compassionate the government is. So it is sparing the agriculturist. But remember, not really sparing him also. So who is an agriculturist? If you look at the definition of agriculturist, I think it was under section 2. Agriculturist has been defined under section 2(7). Section 2 clause 7 defines agriculturist. See the fun. Agriculturist is a person who is an individual or Hindu undivided family. Only individuals. Not even sole proprietors or proprietorship. And Hindu undivided family, because in India we have so many joint families. Only these are agriculturists. If any sole proprietorship is there, under a name or trade name they are doing something, or a partnership form is there, business type of models, business models. Any business model is not an agriculturist. It should be either individual or joint families, Hindu undivided families. That's it. Number 2, it is talking about cultivation of land. Agriculture pertains to cultivation of lands only. Okay, so self, they are doing themselves or their family members. Agriculture operations are Cultivation of land is done by self or family members or by hired labor, but under their supervision. So servants or hired labor under their supervision. Only this much. Only these categories, only these people are spared. What about others? No. The crux is, the pertinent point here is, agriculturist is no doubt exempted. So even in Parliament there was some discussion on this. Some parliamentarians raised this question also. What is this agriculturist? Agriculturist we have exempted, but it is very narrowed concept and narrow definition, because this agriculturist is not covered, say, dairy farm. He has sheep, buffaloes, cows, etc., etc. Dairy farm, or you can say sheep, goats, hens, like this, or birds, poultry farm. What about them? So let us leave poultry farm. Poultry farm, maybe it may come under commercial activity, even though it is done by farmers or farmer-like people. But what about the dairy farm? Rearing of sheep, goats, etc. Earlier, if you look at the definition of agriculture under Finance Act 1994, under the service tax laws, agriculture or agricultural operations were under negative list, under section 66D, clause D. So that was wonderful. But if you look at the definition there, agriculture includes rearing of animals for feed, for anything whatsoever, except rearing of horses. Except the horses, every animal is covered. Here, that animals are missing. Dairy farm is missing. So, rearing of animals now, is it taxable? You have a dairy farm, you are getting the milk and you are supplying the milk, maybe supplying to the nearby vicinity, people around you, neighbors in the neighborhood, or maybe you are supplying to the people like Amul, Mother Dairy. State run cooperative dairies are there. So you are supplying to a private party or cooperative dairies, or you are supplying in the vicinity. So it means you are covered here. How dangerous this is. Whether government has done it deliberately? Yes, government has done it deliberately. So you talk about individuals and Hindu undivided family, that is okay. Business entities should not be allowed to have the advantage. Okay, done. Very good. But only Hindu undivided family is doing some dairy farm, sheep, goats, etc., etc. So you are running after farms and they are selling milk and they are selling ghee and they are selling the dairy products, other like butter and so on. So you want to collect GST from them, say 12% or whatever it is, 5%, even 5%. So you want them to get registered, and once they cross, you can say 20 lakh rupees. 20 lakh rupees is nothing. If you have 2 or 3 locations, means it will be more than that. So 20 lakh rupees per annum means it is nothing. Okay? So around 2 lakh rupees, less than 2 lakh rupees per month. So this is going to hit the villagers. So many villages, like in places like UP or Haryana, etc., they have a very strong base of farmers, they have dairy farms, etc., etc., their turnover is very high. Not 20 lakhs, it would be more than that. 2, 3, 4, 5 families or 10 members in a family, joint Hindu undivided family, joint families are very much there in North India. And 10, 15, 20 people together they are working, and they are working as an industry, and they are working in dairy farm, milk products and other dairy products they are selling also. So you want to collect tax from them. That's very quite unbecoming, and that is going to hit back. Let us see, but right now it is there. We can only look into the legal provisions, but consequences follow. That's a different thing. It is the government, it is the public reaction, and the government, how the government responds to the public reaction, it's a different issue. So, and one more serious matter relating to harshness of the provisions of registration I would like to bring to your notice is, suppose they say aggregate turnover includes fully exempted supplies. Okay? Let us take the case of an agriculturist. I am talking about agriculturist because an agriculturist who is considered to be the backbone of the country has no backbone at all. Since independence, it is the agriculturist, it is the farmer who is hit most, not the people working in the trade union, working in the organized sector like trade union labor, because they have trade unions, they have bargaining capacities, they are an organized force. But the farmers in villages, they are unorganized, they are operating under unorganized sector. There is a lot of disguised unemployment and so on and so forth. They can't raise any issue. So an agriculturist is exempt basically, but he is also, let us assume this individual is also having some taxable supply, any taxable supply, say worth 10 rupees in a financial year. And the rest are exempt, fully exempt, let us say. And it is, if the fully exempted supplies cross 20 lakh rupees, then because of this 10 rupees, he becomes taxable, he becomes liable to get registered. Not necessarily 10 rupees, even 1 rupee. Because taxable supplies, aggregate turnover includes fully exempted supplies also. Fully exempted supplies are 21 lakhs or 20 lakhs plus 1 rupee taxable supply. Then he becomes liable to get registered. So including fully exempted supplies is very dangerous. Of course, non-taxable supplies, if they include, it is too much. Of course, they did not. Okay, so that is the danger, hidden danger inside these provisions relating to registration. So who requires registration? Compulsory. And who do not require registration? Section 23. And who require registration on reaching the turnover of 20 lakhs or 10 lakhs, as the case may be, in the previous financial year. So this is about registration basically, and then we have to see other terms and conditions relating to procedural aspect relating to registration next, about section 25 onwards. Okay, we'll come back.